I would categorize 2025. We had some important victories, some important policy announcements, some important movement. But as I've described it, 2025 was setting the table. And especially on the economy, I think the feast and the banquet's going to be in 2026.
There he was Monday before these big numbers came out yesterday. The administration predicts economic growth in the new year, and we're already starting to see the success. The numbers don't lie. The economy is soaring, the fastest rate in 2 years, defying all predictions. It's at 4.3% GDP, inflation at 2.7. We want to get it closer to 2. Gas prices a 4.5-year low at $2.85. The Wall Street calling this growth the most underreported story of the year. But it comes as a new poll shows a majority of Americans say they're falling behind financially. How do both make sense? Taylor Riggs is here, the co-host of the Big Money Show on Fox Business. So, Taylor, we saw this around 9 a.m. yesterday, 9:30. We get these numbers. Your reaction to this GDP growth first?
Huge and higher than most people expected. Look, some of it you could say is the way that we time imports and exports, but pull that aside, this was a much better than expected growth. It's coming from consumers that are spending. It's coming from businesses that are spending and building out AI. Inflation is lower. And so I think corporate profits were high. And so all of this sets the stage, especially if you're looking at corporate profits that are thinking 6 months out, really sets the stage for a strong 2026.
And you said corporate profits went up.
Huge, to multi-year highs. And so they're already seeing the benefits of the big, beautiful bill and, of course, the extension of those tax cuts, then not to mention the immediate expensing, which automatically hits the bottom line of these corporations once that also goes into effect next year.
70% of the growth is from AI companies.
Huge.
So do you worry that not all those companies are going to survive, like in the dot-com bubble?
So I worry about concentration risk if this is an economy that only needs AI data center investment to prop up everything else, except that I'm not worried because I am convinced this is the fourth industrial revolution and AI is structurally changing this economy in positive ways. I am not concerned that it's going to mean that we're all getting replaced. You were not a robot. You were still here with me. I think that within every technological revolution, it leads to new and different jobs and allows us to be more creative and more being able to produce more. Higher productivity from AI will also help us grow our way out of our debt situation. And so I'm actually very positive on the AI story.
So let's take a look at how the American people feel. Now, this is prior to those numbers coming out, but when asked by Fox, what do you think? Is the economy excellent? 28% said yes. Is it fair or poor? By the way, I would have separated them because poor and fair are a lot different.
Fair.
72%. So how do you make sense of the disconnect?
Yes. So the disconnect is, after 4 or 5 years of being underwater by inflation of 22, 23%, my wages have not kept up. I am still adjusting to higher level of prices. Now, in the next year, as we saw towards the back half of this year, I'm hopeful that my real wages, as Scott Bessent has alluded to, will grow and will start to outpace inflation. So there's more money in my pocketbook. But don't dismiss these polls, because in a midterm election year, you have to acknowledge that people still don't feel great. They're hoping, of course, that changes as more money comes into my pocketbook. But I always say in economics, watch what I do, not what I say. I say I don't feel good, but I'm still shopping.
And would you like to see trade deals come in? And that would, of course, reduce tariffs. A lot of times the tariffs have been used as wedges to get people to the table, like the EU, South Korea. So now you have the USMCA that has to be redone.
Yep.
That would give certainty to the markets that you study so well, South and North. And then you have India, one of our trading partners who we seem to be at loggerheads with. But this seems to be a solvable situation.
I like a trade deal with India. I think that provides a lot of certainty, especially when we think about isolating China and putting China on its back foot and getting China's neighbors closer to us. But I also think that, as Fed Reserve Chair Jay Powell has said, tariffs can be a one-time price adjustment. Once you do that, there aren't more increases. But again, it's about getting my wages back up to match that. But of course, any trade deal would provide certainty as long as we're not doing tariffs on, tariffs off, tariffs on, tariffs off. You just need certainty for the markets and the economy.
I just was struck by Goldman Sachs twice last year. It predicted a recession.
Yeah.
Jamie Dimon said, well, you know, these tariff policies are going to slow down the economy. these are the people you usually look to set the tone and find out where your money's going to go.
Yes, and this is the problem with, again, watch what I do, not what I say. So all of these experts keep telling me, oh my gosh, a quarter of households are living paycheck to paycheck, everything is bad. Yes, people are absolutely struggling, and this administration is trying to help those people. But again, this is an economy that we're reprivatizing from a public sector into a private sector. Trump said it best. He took the patient, he did surgery on the patient. We may not have had anesthesia during that surgery, but now we're taking that patient off life support, and now this is an economy that can walk and run again.
Yes, we hope that. I love that analogy, and we'll make sure to watch you at 12 o'clock today in your great panel on Fox Business. Of course, the Big Money Show. Good job. Thanks so much, Taylor, for coming in for us.
I'm Steve Ducey.
I'm Brian Kilmeade.
And I'm Ainsley Earhart. And click here to subscribe to the Fox News YouTube page to catch our hottest interviews and most compelling analysis.